Hello traders, Damien here. I want to make a quick 10-minute video to address complex corrections and how can we anticipate them, how do we handle them, and how do we not allow them to change our expectations before they have failed. So I'm going to take my chart here. I'm going to go back to a random period of time so there's no cheating going on here. We don't want to cheat. I want to fast forward here a little bit till we're in an area of time where I would start trading prime time. So okay, yeah, this gives us an opportunity to get there. All right, so we're going to scale in our chart here, and we see that the market is in a generalized downtrend. We've made a new structural low, so our expectation is a lower high followed by a new structural low again. So what's going on here, and are we in a complex correction now? Well, we do have this lower high, we do have this new structural low, and anything that happens within this high and this low is considered the correction. Now, the first correction did not make the new structural low. It did not break this high yet. Okay, so what are we seeing here is what we're seeing here is a complex correction as price is making in a short-term order flow, which are these small swings within this high and low, is making a series of retests, new structure high, higher low, lower high, new structure low, retest. It's in a range. More than anything else is in a range. Okay, so now we understand that we are in a complex correction. What is our expectation? Our expectation is a new structural low. Now, is there opportunity here to get into this with the expectation at hand? Well, in order for me to get into this on the short side, it would have to be in the upper levels of this short-term structure. Okay, I do not want to get short here, as obviously I'm trading right into where price found support. But before we move price forward without the benefit in hindsight, let's cover where we are likely to see complex corrections. We're likely to see complex corrections in areas of supply and demand. Why? Because more people are making decisions in these areas, which adds volatility. A lot of people are taking profits, some are buying, some are selling. So volatility enters the market, which creates more complex price action, thus the possibility of a complex correction. We can also expect complex corrections after a weak new structure low or a weak new structure high, as the corrective force should be stronger since they prevented that the strong new structure low, new structure high. So the correcting force should be strong enough to produce some complex price action. Okay, it's that tug of war between the driving force and the opposing force. The driving force is trying to hold on to that weak new structure low and make another one. The correcting force spots that weakness and try to capitalize on it. Makes sense, right? That's what you would expect a complex correction. Okay, and after a expectation failure, you're likely to see a deep correction and a complex correction. Okay, now the truth of the matter is you have to always be prepared for that complex correction, because at the end of the day it can happen anywhere. But we have to understand, the framework of where it's in, where is the correction, the context of the correction, meaning price would have to break above this to signify to me that the market is going up. The bulls have to prevent price from closing below this to keep price going down. There is always a constant battle between the forces of buying and selling. The buyers are always going to try to prevent the sellers from achieving their next goal, their next expectation, and likewise on the other side of the fence. So it's important for us to understand that as long as there is this battle at hand, the driving force that is the strongest, okay, overpowers the weakening force. But when that balance starts to balance out a little bit, when that force starts to balance out a little bit, and both parties seem to have a pretty comparable degree of strength, is where you're likely to see some of those complex price actions, those complex short-term swings, and those complex corrections. Okay, so in this particular case, price showed a lot of strength coming down. They've made a decent projection. Okay, there is really no true reason why we should be getting this complex corrective process. Nonetheless, it's here, and we have to process it. We have to figure out whether we want to be short, whether we want to be long, or we want to be on the fence for right now, waiting to see what happens. I want to be on the fence, waiting to see what happens. So I'm going to move price forward. And we get that weakness, very weak new structure low. We get a very smaller close here, but I don't think that we are done here. I think that, you know, price is going to correct a little bit, and the bear is going to come in a little stronger. Okay, so that happened, and now we're starting to see some of that weakness and that invitation for that the buyers, you know, are wanting to come in again. We see some buying pressure, buying pressure, buying pressure, selling failure, not able to close below any of these lows, and we're starting to see a stronger capability or stronger buying force that's able to hold on to this candle and not prevent. We'll talk about bar by bar later. I don't want to get into it now. We want to talk about complex corrections. So now we want to see price respect what? At the very minimum, this level here. This level here should be respected. Do we expect a complex correction coming back up? It's a very real probability that we might see a complex correction. Why? Well, although we've made a decent new structure low, it wasn't too impressive, and we see a lot of weakness down here. Okay, so we should expect a somewhat relatively deep correction into this area here. We see that we have a clear line of structure here. So somewhere in this general area, we would expect to see price be able to get into this area, and we're starting to see some of that weakness come in now. We may see the bears come in with a little bit of weakness, and then the bulls come in again and drive price higher. Okay, and now we see that nice rotation in price that you would like to see, and we did see the beginnings of that possible complex corrective process that we felt could be a possibility here. Okay, so price corrected into the general area here. We had a great rotation in price. So if I got short here with the expectation of a new structure low, my stop would have to be above this area. Now I have structure here, but I do have this tail I need to be a little bit concerned about, and I do have structure, so I want to be slightly above that. Okay, and my expectation is what? A new structure low. Okay, so in this particular situation, it's fine. I got taken out, no big deal. Okay, but now the market has spoken to me. Okay, and I am expecting now what? For the market to head higher. Why? Well, because we had a new structure low, expectation failure, new structure high. Now, our studies show that expectation and structure analysis plays out over 70% of the time. So now waiting for a correction here and looking for a long gives me a 70 or greater % chance of being in line with what price is going to do next. Okay, so now that we have a new structure low and a new structure high all in one swing, what are we likely to see? Complex correction. So let's wait and see what price does here. We're going to wait. Looks like we may get that correction somewhere around here. Not yet. Now. Okay, so now we're likely to get that correction in price here. Okay, where are we likely to go to? Okay, we're likely to go to somewhere. There's structure in this general area here. I'll draw for the interest of time. We do have some structure in this general area here. We would expect price to come back down, not too deep, maybe somewhere between here, and show us a intent to take price higher. Okay, what did I talk about? New structure low, new structure high, possibility of complex corrections. Okay, nonetheless, we have some complex corrections. We're not correcting deep, like deeper than I expected it, as we see prices trying to respect the structure area, I would expect the price to get a little lower, and it does. And now I have a better signal in an area that I predetermined. So I waited for price to come to me. I was patient. I didn't get antsy in here and get in and trade right into where price is trying to find resistance. I waited for price to come down to a better level, understanding that it could be a complex correction here, and I waited for that signal. So now this is where I would enter. Okay, my stop has to be what? At the very least below this area here. Okay, my expectations for a new structure high. Okay, we're still in this complex correction. What happened? Price has not made a new structure high. That's very concerning to my trade and to my position. We're still in that complex correction. Do I need to change my expectation? No. Do I need to change anything? No. Am I concerned that I may be taken out? Yes. Why? Because I am way above structure. This is the swing. I don't want to take that much risk, especially after we had a change in direction and an expectation that when there is a change that we correct deeply, right? And price corroborates and produces that new structure high. Stops go to break even +5, and I would expect price to hold on to this general area. Okay, so now we have a situation where we were locking in profits along the way and we got taken out. That is great. So now you see how we handle complex corrections. If you want another video on this, I'll be happy to make it. I wanted to keep it short. It's at 11 minutes. I think you can understand where you're likely to see them. You saw one in action here. You saw a trade that failed. You saw another one that would have succeeded. I didn't want to get into profit targets and proper entries and bar by bar because we haven't covered those areas yet, and I don't want to push you in a direction that we haven't gotten there yet. Okay, I know that it's hard to be patient sometimes, but we need to be patient so we can learn these concepts correctly, properly, so you can be really good, efficient price readers and traders. Okay, thank you very much. I hope this lesson had value to you. I hope it helped you process complex areas, and if it still needs to be readdressed, let me know. I'll make another video, a slightly longer one, that addresses all of these areas. Thank you very much.